Hello and welcome to Calling Monster Finance. It's September 10th, 2025. Today, the U.S. markets presented a story of significant divergence. While the S&P 500 and the Nasdaq Composite climbed to new all-time highs, the Dow Jones Industrial Average finished the day in negative territory. Collaborated's split performance was driven by two powerful and competing narratives. On one hand, new inflation data showing a surprise decline in producer prices has solidified expectations for a Federal Reserve interest rate cut. On the other hand, a massive rally in a handful of artificial intelligence stocks, led by a historic surge in Oracle, created a narrow path upward for the broader market, leaving many other sectors and major stocks behind. Coming up, we'll analyze the macroeconomic data driving Fed expectations, break down the corporate news creating this deep divide in the technology sector, and examine the political commentary surrounding the central bank. The main storyline for today's session was the powerful combination of dovish economic data and a major development in the technology sector. The S&P 500 closed at 6532.04, a gain of 0.30%, while the Nasdaq Composite edged up to 21886.06. Both indices set new closing records. The 60, the primary catalyst, was the August Producer Price Index, or PPI, which unexpectedly fell by 0.1%. This result defied forecasts for an increase and provided strong evidence that inflationary pressures are cooling. For investors, this data was interpreted as a clear signal that the Federal Reserve has the justification it needs to begin cutting interest rates, with many now anticipating a move at its meeting next week. This favorable macroeconomic backdrop was amplified by corporate news from Oracle. The company's stocks surged after it projected substantial growth in its AI cloud infrastructure business. This forecast overshadowed a slight miss on its quarterly results and ignited a rally across the AI ecosystem. The announcement lifted related stocks, including NVIDIA, which gained 3.85%, and Broadcom, which jumped 9.77%. However, this enthusiasm was not shared across the entire market. The Dow Jones Industrial Average lagged significantly, closing down 220 points or 0.48%. The decline was largely attributable to a 3.23% drop in Apple shares, following a market reception to its new iPhone 17 launch that was viewed as uninspiring. This contrast highlights a growing performance gap within the technology sector, suggesting the market's advance is becoming more concentrated around the single theme of artificial intelligence. Today's session crystallized the market's focus on two dominant forces: an expected pivot to easier monetary policy by the Federal Reserve, and an AI investment cycle that continues to generate significant momentum. Let's take a deeper look at the two most significant drivers of today's market action. Both the macroeconomic picture, which was defined by the August Producer Price Index report released at 8:30 a.m. Eastern Time. The headline index showed a month-over-month decline of 0.1%, a sharp contrast to the consensus forecast, which had anticipated a 0.3% increase. The core PPI, which excludes volatile food and energy prices, also fell by 0.1%. The market's reaction was immediate. This data, combined with other recent reports showing a softening labor market, was seen as giving the Federal Reserve a clear path to cut interest rates. This sentiment was reflected directly in the bond market, where the yield on the 10-year Treasury note fell by 4 basis points, closing at 4.03%. This indicates that investors are now pricing in a high probability of monetary easing from the central bank. The second key driver was company-specific news from Oracle. In its latest earnings report, the company projected that its cloud infrastructure revenue would jump 77% in the current fiscal year. This powerful forward guidance completely overshadowed a narrow miss on its most recent quarterly revenue and earnings figures. Investors reacted by aggressively repricing the stock as a primary beneficiary of the ongoing build-out of AI infrastructure. Oracle's shares closed the day up 35.95%, a move that had a significant ripple effect. It validated the broader AI investment thesis and helped lift other companies in the space, contributing directly to the positive performance of the S&P 500 information technology sector, which gained 1.76%. This single corporate announcement was powerful enough to shape the direction of the broader market indices, even as other major technology companies faced headwinds. Today's market-moving events also drew commentary from prominent public figures. Following the release of the soft producer price index data, President Donald Trump commented on his Truth Social platform. He wrote, quote, "Just out. No inflation. Too late must lower the rate big right now. Powell is a total disaster who doesn't have a clue." End quote. This commentary directly used the morning's economic report to intensify public pressure on the Federal Reserve and its chairman, Jerome Powell, for significant and immediate interest rate cuts. While this political pressure is notable, the market's primary reaction, as seen in the drop in the 10-year Treasury yield to 4.03%, was driven by the economic data itself, which aligned with the policy direction advocated by the president. In other news, there was a notable shift in the global wealth rankings. The significant surge in Oracle's stock price increased the net worth of its co-founder, Larry Ellison, to a level that surpassed that of Elon Musk, making Ellison the world's richest person. This development is a direct reflection of the market's divergent performance. Oracle's stock soared 35.95% today based on its AI business outlook. In contrast, Tesla's stock, while also finishing positive, gained a more modest 0.24%. This performance gap illustrates the market's current focus on enterprise-level AI infrastructure. For his part, Elon Musk announced that the upcoming version of Tesla's full self-driving software would be a major upgrade, stating the car would, quote, "feel like it is sentient." Several major companies were in focus today following their earnings announcements and corporate events. Both Oracle. The company narrowly missed analyst consensus on its fiscal first-quarter revenue and earnings per share. However, the market looked past these results to focus entirely on its forward guidance. Oracle announced new multi-billion-dollar contracts and projected its cloud infrastructure revenue would jump 77% this fiscal year. This explosive outlook for its AI business was the key driver of the stock's performance, which closed up nearly 36%. Next, Apple. The market continued to react to the company's iPhone 17 launch event from the previous day. The general perception among analysts and investors was that the launch was lackluster, offering no major new features to spur a significant upgrade cycle among consumers. This sentiment led to a sell-off in the stock, which closed down 3.23%, making it the primary drag on the Dow Jones Industrial Average. In the semiconductor space, Synopsys reported quarterly profit that fell short of analysts' expectations. This earnings miss triggered a significant negative reaction from the market, with the stock falling sharply by over 35% by the close. Finally, Chewy, the online pet supply retailer, reported second-quarter results that largely met Wall Street's forecasts. In a market environment that has been rewarding exceptional growth, simply meeting expectations was not enough for investors. The stock traded lower as a result. Looking deeper into the market's structure, today's session revealed clear divergences among different sectors. The performance of the main indices masked a highly selective rally. The top-performing sectors within the S&P 500 were information technology and energy, which both gained 1.76%. The strength in technology was highly concentrated, powered by the AI-related stocks that rallied alongside Oracle. On the other side of the ledger, the consumer discretionary sector was the worst performer, falling 1.58%. This decline was heavily influenced by weakness in some of its largest components, including Amazon, which fell 3.32%, and the ongoing underperformance of Tesla relative to the broader tech rally. Other defensive sectors also saw declines. Consumer staples fell 1.06%, and healthcare was down 0.91%. This performance split shows that investor capital flowed very specifically into the AI theme and energy stocks, which benefited from a rise in crude oil prices. Meanwhile, broad consumer-facing companies and defensive areas of the market faced selling pressure. This lack of broad participation suggests that while the headline indices reached new highs, the foundation of the rally was narrow. Now, let's recap the closing numbers for today, September 10, 2025. 60. The major U.S. indices. The Dow Jones Industrial Average closed at 45,490.92, down 220.42 points, or 0.48%. The S&P 500 index finished at 6,532.04, up 19.43 points for a gain of 0.30%. The Nasdaq Composite ended the day at 21,886.06, adding 6.57 points, or 0.03%. And the Russell 2000 index of small-cap stocks closed at 2,378.01, down 3.81 points, a decline of 0.16%. To key macro indicators. The CBOE Volatility Index, often called the VIX, closed at 15.35, up 2.06% on the day. The US dollar index was little changed, closing at 97.83. In currency markets, the US dollar was trading at 147.38 Japanese yen. The yield on the 10-year U.S. Treasury note fell to 4.03%. In commodities, crude oil futures settled at $63.75 a barrel, a gain of 1.79%. Brent crude was at $67.57, up 1.78%. Gold futures were nearly flat, closing at $3,680.40 an ounce, and the price of Bitcoin stood at $113,742.53, a gain of 2.09%. Now for the 5 U.S. stocks with the highest trading volume today. In first place was the SPDR S&P 500 ETF, which gained 0.29%. Striped was Oracle, which surged 35.95%. Third was NVIDIA, which climbed 3.85%. Rotations of the investor was the Invesco QQQ Trust ETF, which finished up 0.03%. Embarrassment, and in fifth place was Tesla, which gained 0.24%. In summary, today's market was a tale of two trends. On one side, cooling inflation data has paved the way for the Federal Reserve to potentially lower interest rates, providing a supportive backdrop for equities. On the other, a highly concentrated rally in AI-related technology stocks created new highs for the S&P 500 and Nasdaq, but this strength was not broad-based, as evidenced by the decline in the Dow Jones Industrial Average. The key variable for investors to watch moving forward will be next week's Federal Open Market Committee meeting. The market has now fully priced in expectations of a rate cut, and the central bank's decision and forward guidance will be critical in determining whether this narrow market leadership can broaden out to other sectors, or if it remains a point of fragility for the market at these new record levels. If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments,